Howard, good to have you back on the program.
Thanks for having me.
Okay, so as with the GE, basically the top line matters more, right? What is that telling you these days?
Well, the top line is not, we've got about 23% in right now. The top line is not growing nearly as quickly as the bottom line because of the cost cuttings. And it's the top line that we need to do. We've done the cost cutting. We're getting the benefits. We're seeing the EPS beat. Most of the companies are beating on sales, but only slightly. And the sales estimates were not set too high. So the sales are somewhat disappointing at this point in time. We need to increase those if we're going to increase the bottom line.
And that tells you what, that the economy is not recovering as quick as some are saying, or what does it tell you?
The corporations are not spending as quickly. CapEx was down 22% this year. We expect it to be up 28 in 2009. We expect it to be up 28% in 2010. And consumers aren't spending yet. Most of the growth is expected to be later in the year as far as sales go, and hopefully that comes down. But it's very slow on the sales. You know, 2009, the S&P 500 sales are going to be down $1.1 trillion. That's about 40% more than the healthcare plans. You cannot sustain that kind of a loss on the top line without affecting the bottom.
That's so trillion with a T.
Trillion with a T. That is correct.
We can't underemphasize that. Okay, then given that, where does the economy need to be to make up those losses?
Well, we need to increase, obviously, the sales. Capital expenditures, as we said, will increase. We figure coming back to about 2008 levels because companies are going to have to make up for the infrastructure items. IT is expected to gain greatly from that. IT for the fourth quarter is going to contribute over 20% of the earnings. They've displaced healthcare. They are the major breadwinner. Moving into 2009, there'll be a seesaw with energy coming up a lot. But the sales are important. Capital expenditures, if we get an accelerated depreciation schedule, that will help a lot. Consumers are where it's going to come down to. If the unemployment gets worse, we think it's going to hit about 10.4% mid-year. But if we test that 10.8%, consumers are going to pull back. They'll pull back, companies will pull back, and those sales will continue to deteriorate.
Okay, so you just told us some good information there. Then Howard, 10.8% is something we need to watch. Look, we don't have a lot of time, so I just want to. So Howard, you know, I know you've been listening in on what these CEOs have been saying during their earnings calls. Anything struck out at you at all so far in this quarter?
Not so much yet. I haven't heard the GE, although I want to hear about their tax item because they got such a big benefit there from the financials. But most of them are not giving that much projection into 2010. They're cautiously optimistic, but they're not putting the numbers down yet. We are hoping that we'll get a bit more as we go into the quarter. So the projections are not there the way they usually are, let's say 2 years ago. Last year it was very difficult. You got very little. But they're not back yet, the guidance.